Gold extends its losses late Tuesday morning, and joining me now is Bill Baruch over at iiTrader in Chicago. Bill, good to have you back.
Thanks for having me on today.
Bill, we see gold struggling here in late Tuesday morning trading. Is there near-term upside potential for the metal?
Well, we could see some physical buying step in, against this below 1,300, closer to 1,280. But the reality is the market is subdued and it's coiling. This range is getting tighter, and this is what gold likes to do. We're going to get a directional move, and all signs are pointing to down. However, as iiTraders mentioned in the past, we're not getting married to anything. There's a 200-day moving average just below 1,290. There's a couple trend lines, that do come in. Shorter-term one at 1,290 and a longer-term one about 1,270, and we really need a crack through there to break. But we also need more consistent data out of the U.S. We're starting to see positive data out of the U.S. with the housing and building permits today. We still have the FOMC minutes and Jackson Hole around the corner, but if we continue to get consistent data out of the U.S., that's what's going to break this market. If the dollar continues to press higher, it's going to put pressure on gold priced in dollars.
Bill, you mentioned Jackson Hole. Do you think the meeting could bring about some surprises to the marketplace?
If some signs are pointing towards rates rising sooner than later, or just even the rumblings of so, as well as the FOMC minutes from the previous meeting are going to be released tomorrow. So if we start getting a feel that the Fed is a little more hawkish as we get closer to October and closer to winding down this year and looking at next, then yeah, this is going to break gold. We still have those geopolitical tensions between Russia and Ukraine that at any moment this market can rally, and that's why we do not want to get married to any positions, and you have to manage risk properly. But gold has to chew through some of these major support levels in order to find its path to least resistance lower, and what's going to do that is this more consistent data out of the U.S.
So, Bill, what do you feel could really move gold the most right now?
If Russia and Ukraine fall out, this market could easily rally $20, $30 to $13.30. If something gets escalated in Iraq, we're going to see a $20, $30 rally. So gold's biggest fear right now, or the bullish sense of it, is if this geopolitical tension really grabs the hold of the market. That's where this thing can't. That's why the bears are not grabbing control of it, and that's why some of these support levels are holding. If nothing does rise and this market can shoot through some of these support and the year unfolds and the Fed becomes more hawkish and there's a sign that they're going to raise rates sooner than later, this market has a lot of potential to the downside. And then when we get a close below 1,250, you could even start seeing the 50-day moving average move back below the 200, and there's a death cross. But that's going to need patience, and we need a lot of the geopolitical fears around the world right now going to have to subside.
Finally, Bill, let's conclude some key levels you're looking at for gold.
Well, 1,288, 1,290 is where the 200-day moving average comes in. It's going to be a major level that this market has to close below as well. There's a major trend line that comes in just below 1,270 and rising. Previous lows at 1,240 area. So there are several levels down there, and all of those levels are going to be not only attractive for investors, the bulls, but as well as looking at the physical market. There's going to be physical buying that's likely going to step in at those levels too. So the market needs to close below that 1,250, and that's the only way it's going to find the path of least resistance lower. And that's going to signal the failure at 1,300.
Bill, on that note, thanks so much for joining us.
You're welcome. Thank you for having me.
And thank you for watching Kitco News. I encourage all of you to sign up for our latest feature, a weekly newsletter. You can do so at the link below. Have a great day.